Hello, guys. Listen, I'm going to start with the end of the show first this time. I put this show together, and I forgot to add something to it that I wanted to talk about real quick. Um, I wanted to talk about silver refiners in the United States, You know what? If we do have some sort of a crisis where everybody wants to run to gold and silver, and everybody wants to get some eagles, or some Canada Maple Leafs or anything like that. Well, I'm going to tell you what. There's only all these companies went out of business. Republic and who else? A number of companies, these refining companies, went out of business. And if all we got now is let's turn the charts on right now, and I'll show you. We only got two refiners in the United States, and they're owned by the Japanese, from what I hear. That's what I hear. And this is one of them right here, Sihi or Shati or something. I can't spell it. It's Japanese name. Ashinti Refining. So you're going to be relying on the Japanese to produce your silver coins. And I don't know how much production, how much they can handle. I mean, if there's a huge shortage and we need to mint more silver because everybody wants it, well, we got this company right here, and we got this one right here, Metal Ore Technologies, United States, and it's owned by the Japanese too. So listen, stay tuned. I'm going to get right into this show. I just wanted to add that little amendum to the show, and I'm going to talk about precious metals in the next recession and how and what's I think would very possibly happen very soon. So stay tuned. Hello, guys. How are you doing this afternoon? Welcome to the show. What we're going to talk about this afternoon is what's different. Now, remember during the 2008 crisis when the stock market fell off, gold and silver fell off for a little while. For a little while, they fell down, and then they climbed back up to like over $1,900. But we're going to take a close look at that, and we're going to talk about what's a little bit different with this crisis that's impending right now. Right now, we got a little bit of a bounce in the markets. I think this bounce is going to continue a little bit longer, especially there's going to be a meeting, a trade talks between China and the United States coming right up. There's an awful lot of pressure on both sides to end this trade war, and I think that's going to be the outcome. When we see this outcome, the end of the trade war, we're going to see the markets bounce, and a considerable bounce in the markets if that's the outcome. I believe that is going to be the outcome, is we're going to see the end of the trade war. We're going to see some sort of a deal between China and the United States. Now, what's precious metals going to do? Because the market's going to climb again, but it's only climbing to fall again. Because what's happening is liquidity is being drained out from under the markets through quantitative tightening. We're going to take a look at all these things coming right up, and let's get started with opening the charts right here and take a look at what's going on. Now, I want to first show you the U.S. dollar index, and we're going to point out that it's at 96.20. Now, it's come down, the U.S. dollar index. If we take a look, let's go out to the one-year chart here. Let's go out to the three-year chart. Okay, what we can see is it was peaking at over 100 in the U.S. dollar index. Let me see, it was almost 103. It was right up 102.97. The dollar's come down some, but it's in the process of dropping a little bit right now. Now, this is exhibiting weakness in the dollar. The dollar's got weakness in it, and I'll explain to you the reason why. If we look right down here in this valley right here, when the dollar index was running around 89.07, okay? This is when quantitative tightening really got underway. And also increasing interest rates by the Fed. And we see it has had a positive effect on the dollar. But really, considering what they're doing, lowering oil prices, quantitative tightening, also the process of raising interest rates, the dollar should be a lot stronger than it is right now. The dollar is actually exhibiting weakness. Now let's take a look at the U.S. gold chart over the last so many years, going back to 2008. And what we're going to do is we're going to fixate on the price back in 2008 and what happened. We're going to narrow the charts in this way. So we take a look at the recession, a close look at the recession of 2008. And we're going to narrow the charts in this way too, so we can be a little bit myopic on here. And we'll move the chart over a little bit so we can see the prices. Now, what we see happen is at the start of the gold price fall, when the gold price slid in 2008, at the start, gold was $1,142. But we had been through a period where gold had risen from $731. Now, can you imagine? This is quite a little bull market right in here. First is $731, and then it was up to $800, and then it was up to almost 900, and then it kept climbing, 966, and over 1,000, and everybody was euphoric. Well, the crisis of 2008 hit in the middle of this bull market in gold. And I mean, this was a really good little bull market in gold. It took the price all the way up to $1,142. And when the crisis hit, then the gold price dropped because of the deflationary pressures. But in the middle of the crisis, they ran the gold and silver at a certain point during the crisis, right in the middle of it. You notice, in the middle of the 2008 crisis, and then the gold price exploded. If we open the charts up a little bit further here, we can see that the gold price just surged upwards after that period in time. And so this is a totally different scenario we're in right now. If we expand this chart out and fully open it to 2018, see this gray shaded area right here? This indicates the recession of 2008. Well, you know, it's been a long time since we had a recession. We're far overdue, and so there's going to be another gray shaded area just in front of us right here. But this time, instead of the gold being in a long-term bull market, gold has come down all the way from over $2,000, $2,031.23. It's come all the way down. It's made two lows. One here at 1127 and another one not long ago at 1181. It's made two lows. So gold has been in a bear market for a considerable period of time right now. So we're entering into this recession with gold being in a bear market. Last time we came into the recession with gold being in a very powerful bull market. Okay? Now, what was the opposite that held true in the United States dollar during the last recession? Well, if we go back down here to 2007 and 2008, we see that the dollar was soaring up. It went from 72 roughly, around 72, all the way up to 89 on the U.S. dollar index. So we had a rising dollar, power and strength in the dollar, and at the same time, we had a bull market in gold. It was a perfect thing for gold to turn downwards because of a rising dollar. Okay? The strength in the dollar last time. This time, we got a totally different story with the dollar. This time, what we got, if we spread this chart out and we take a look here, we see that the dollar's starting to roll over. If you take a look, let me pull this chart up just a little bit so you can see it. You can see that the dollar has crested just recently, and now it's starting to roll over, and it's down to 96.2. So we're getting ready to start this recession with totally different set of circumstances. Much more bullish for gold this time around. Now, if we take a look again at the U.S. gold historical chart, let me see, we're going to have to spread it out a little ways here. We're going to have to pull her back so we can see what's happening. Let's pull it back to, let's see, back a little bit further this way, a little bit further. okay, what we can see is this is a bull market in gold. We're still in the bull market in gold. If you draw a line between this price down here at $371 and the price where it is today, you can see a steady increase in price. If you looked at this chart in particular, on any asset class, you'd say it's rising. This asset class is going up in price. It's in a bull market. Short had a little slump. This is just a little slump that we've had in the middle of a bull market. This recession, the last recession, really gave strength and impetus to the bull market. As we can see, this gray line here indicates the last recession. And look at what happened. It went all the way up. The price of gold went all the way up to over $2,000. This was before the riggers started to come into the market. And look, they rigged the price down on gold and silver, all the way down to $11.27. This was to protect the dollar. But now at this point, it's becoming useless. It's becoming an effort in futility to protect the dollar. And the reason why is because the dollar is being undermined. The petro standard dollar is what they've always used to buy and sell oil with, is what gave the dollar its value. The world reserve status for the dollar is what's given the dollar value over the years. This has been being eroded to the point now where even with all of their manipulations in the marketplace to try to support the dollar, by lowering oil prices is one of their methods. And you're probably asking, well, how do they lower oil prices? Well, I'm going to explain. It's actually very easy. Oil is on a very fixed supply. Every single day we use a certain exact quantity of oil to run the world. Just like you in your household. You might have an oil heater in your house. You know exactly how much it takes to heat you through the winter. Each day you use a certain amount of oil. Okay? It's the same way with the world. We use a certain amount of oil. If they overproduce slightly, then there's a glut on the market. The oil price drops. If they underproduce slightly, then there's oil supply depletage, and the price rises. Okay? It's very easy to manipulate the oil price because of the exact amount the world uses each day. OPEC knows this. The United States government and OPEC together can manipulate the price. Now, one of the ways they can manipulate the price is by oversupplying the market. And that's very easy to do. All they need to do is get the central bankers, control the banks, and the banks just lend out loans to companies that are going to go out and make oil. Basically, this is the way it works. They lend money out to these guys with 0% interest rates. They're able to lend absolute enormous amounts of money. These guys go out and they dig and they put in the wells, and then the oil comes popping out of the ground. It doesn't matter the cost. They're not worried about the cost. They're worried about the price of oil. They bring the price of oil down. They manipulate the price of oil just like they manipulate the price of silver. It's actually they use the bankers. They use the banks for the same way to manipulate the gold and silver price by creating more gold and silver. But they don't create more real gold and silver. They create more paper gold and silver, and then it lowers the price. And they've been doing this manipulation to the oil market and to the gold and silver market. And the reason why is because the more oil you can buy with your dollar, the more gold and silver you can buy with your dollar, then the more the dollar's worth. It's very simple. Okay? So they've been doing this. And also, to add fuel to the fire, they've been removing dollars from the system to the tune of $50 billion a month. Starting rate, I'll show you where they started with it on the U.S. dollar index. If we spread the charts out here and we go back to the 3-year again, you can see where they started this. Right down in here was where they started removing money from the system. So they're doing more than one thing at the same time to support the dollar. Lowering oil prices, lowering the price of gold and silver, and also removing dollars from the system. $50 billion a month they're removing of liquidity from the system. Now, the problem with removing this liquidity from the system is if they stop doing this, The dollar, because look at the dollar. It's not going anywhere. In fact, it's falling with them removing dollars from the system. Can you imagine what the dollar would do if they stopped removing dollars from the system? If they were to lower interest rates, can you imagine what the dollar would do? If they were to let the gold and silver price out of control and the gold and silver price surged upwards, if oil production were to slump and the price of oil were to move upwards, can you imagine what that would do to the dollar? Because the dollar's sitting on its perch right now, and it's only being held up by these these legs of support that the Fed and the central banks are giving the dollar. Pull these legs of support away, and the dollar comes tumbling down. But at the same time, they have to sacrifice the stock market. They have to sacrifice the bond market in order to continue to support the dollar. Ultimately, I can see the dollar is weak. It's very weak. If it was a patient laying on a bed right now, it would be like the doctors are giving the patient everything they can to try to vitalize him, and it just ain't working. His vital signs are dropping. But if they pull life support off, what's going to happen? He's going to die. This is the way with the dollar right now. This is the condition that we're in right now. But what about gold and silver? God's money? I'm going to tell you what, guys. This gold and silver price, you know, she's made this, I think it's a final bottom myself. Now, that's my personal opinion only. It's not financial advice, but we've risen up from those prices down, those low prices down to around $1,181, and now we're back up to about $1,290, you know, and I think that this is the start of going back into this bull market that we've been in all along. If you just take a look, you can see this is a big bull market that we're in. This goes all the way back to 2002. So if you want to know where I think the best place to put your money is in real physical gold and silver. Don't buy paper gold and silver contracts, because you don't hold the real metal. I would suggest don't keep your silver and gold with a storage company, you know, because if the banking system goes down, what's going to happen to your storage company? Because they're part of the banking system, owns these storage companies. And so if the bank goes into foreclosure, the storage company's going to go into foreclosure, and they're going to seize all the assets inside the storage unit. They're going to put them away in a Brinks truck and haul them away, and then you're going to have to chase after your gold or silver to get it back. And you're going to have to do all this stuff, prove ownership and everything else, take them to court. God knows when you'll ever get it back or ever see it again. And if we're in the middle of a crisis, if you don't have it in your hands, you don't have it. When these companies go bankrupt, when margin calls start to go out. And, you know, we never really seen any real margin calls, I don't think, yet in the stock market. But I think on this next fall that we're coming into, not long from now, we're going to start to see margin calls, quite seriously. We were just getting, it scared them. The big shots out there, they were ready to call in the plunge protection team, blah, blah, blah. They were getting scared. You think they're scared now? Wait until the next big drop. Okay, but when I say wait for the next big drop, I don't think that the shoe's going to drop quite yet. I think we're going to have to go through this thing where the trade war ends and stuff and the stock market surges upwards. But you know what? That surge upwards, I don't think it's going to make a new peak, and I think it's going to fall, and it's going to fall big time, not long afterwards. And I think this is going to be a boon to precious metals. I think precious metals are going to do really good in the short, not looking out 3 years from now either. I think this is all going to get started really soon, you know? So listen, thank you guys for listening. Like and subscribe, and we'll catch you in the next show. Bye-bye, guys.